Welcome back to Investing Talk Podcast.
Today, we're looking at Unusual Machines, a company making waves in the high-growth drone and component sector.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
Yeah, let's. I think the only place to start is the financial turnaround. It's been pretty monumental.
Absolutely. For the first time in their entire history, Unusual Machines reported a profitable quarter. That was Q3 2025.
That is just a huge psychological breakthrough for a company like this.
It is. We're talking about $1.6 million in net income. That translates to about 5 cents per share.
And that success, it wasn't an accident, was it? I mean, this points to some really strong execution.
Incredibly strong. They posted a record gross margin as high as 39% in that quarter.
39%.
And their 9-month revenue, that climbed significantly too, up 55% year over year to, what was it, $6.30 million.
So that kind of performance is what fuels these incredibly bullish consensus expectations we're seeing.
Exactly. The latest analyst outlook suggests 12-month guidance could potentially reach into the $19.33 to $20.74 per share range.
That's a massive projected upside. It signals a lot of confidence that they can keep this up.
Well, the foundation of all that optimism, I think it's rooted in their strategic positioning.
Specifically in the defense sector.
Right. Their focus on NDAA-compliant components is creating a real competitive advantage, a moat, really.
And that compliance, it's already translating directly into contract wins, isn't it?
It is. They secured a pretty substantial $800,000 order for high-performance drone components from Red Cat.
Okay, but maybe even more validation came from the U.S. Army.
That's the one. The 101st Airborne Division placed an order for 3,500 motors and BLU UAS-listed flight controllers.
That's a real stamp of approval.
And this whole defense ramp-up is supported by some serious investment in U.S. manufacturing.
Yeah, they're not just talking about it. In October, they launched a new 17,000 square foot motor manufacturing facility in Orlando, added 30 new hires.
And then just in November, they leased an additional 25,000 square foot warehouse and fulfillment center right in the same area.
It's a clear commitment to onshoring their supply chain,
which improves control and just makes them a much more attractive partner for these government contracts that need a secure domestic supply.
Okay, so beyond the revenue growth, let's talk about the balance sheet, because this part of the story is exceptional.
It really is. Unusual Machines holds over $133 million in cash reserves.
And what makes that figure truly stand out?
Zero debt.
Zero.
Their debt-to-equity ratio is 0%. I mean, that gives management maximum flexibility for future growth, for acquisitions, or just weathering any kind of economic storm.
And they've been really effective at capitalizing on investor confidence to build up that war chest.
Very. They closed a major $48.5 million financing round in Q3.
And then follow that up with an at-the-market equity offering in October.
Yep, raising another $72.1 million. This consistent capital formation is what's supporting their aggressive growth plans.
And we're already seeing them deploy that capital, right? We saw that significant $25 million investment in XTI Aerospace just this month.
Yeah, which suggests they're actively looking for strategic partnerships and, expansion opportunities outside their core component business.
Okay, so let's look at the flip side. We have to address the risks here.
Right. Despite the recent profitability, the company still has some historical hurdles to overcome.
Their trailing 12-month net loss is still pretty significant. It's hovering around $35.75 million.
And they aren't generating positive free cash flow yet.
Which is, typical for a rapidly scaling firm, but it's still a risk.
It is, and operating income is still negative, around negative $7.2 million.
Yeah.
So while the trend is improving, sustainability really depends entirely on that top-line acceleration continuing.
This brings us to the valuation. It is high.
It's very high. The company currently trades at a price-to-sales multiple of around 59 times.
59. That places a tremendous amount of pressure on management to execute flawlessly.
Flawlessly. And maintain that explosive growth, otherwise that multiple could compress very, very rapidly.
Plus, you have to remember this sector is just highly volatile.
Very. The stock has shown weekly price movement of about 15%.
Which is great for momentum traders,
But traditional risk-averse investors really need to be aware of the potential for some significant sentiment swings.
So given that high valuation, the immediate catalysts become key to justifying the price.
Exactly. And we have several important dates coming up. The Q4 earnings release is expected in December, then another earnings report in February.
We also see some sector-wide events like ETF rebalancing happening in late November and then again in early January.
Right, and that typically affects liquidity and trading volume. Plus, there's anticipation of a potential major purchase order announcement around mid-January.
And beyond these confirmed events, the market is just buzzing with speculation.
A lot of chatter. There's persistent talk about a strategic uplisting from the NYSE American to the Nasdaq.
Which would likely drive much greater institutional investment and analyst coverage.
Of course. And that investment in XTI Aerospace has fueled rumors about a potential joint venture to, accelerate product commercialization,
And you're hearing talk of international defense contracts, too.
potentially in Europe, targeting their certified components. The speculation around a potential acquisition of a drone software provider is also pretty active.
So when you put it all together, Unusual Machines presents this fascinating blend.
It really does. Immense financial strength, a clear defense sector moat, and some powerful near-term catalysts.
But all of that is balanced against a really high valuation and the ongoing need to maintain that operational momentum.
What's fascinating here is how quickly they managed to pivot to profitability while maintaining zero debt. I mean, that's the key.
So the question for investors is whether their investment in XTI Aerospace will accelerate their path to sustained, large-scale operating income.
Or if that capital deployment just introduces new execution challenges. It's certainly a story worth tracking very closely.
And if you want to stay updated on this story and others, make sure you subscribe to the podcast for more in-depth analyses.